Hello, everyone. I'm Corbin, and I'm the Tax Product Manager at Iris. And I'm excited to welcome you to a joint webinar here today with myself, us, Iris, and WhisperClaims. We at Iris and WhisperClaims have teamed up together, forming a partnership as we're two sides of the same coin in our mission to build innovative solutions that save time for you and your practice. As Suze will demonstrate in more detail later, WhisperClaims is an award-winning dedicated R&D tax software and support for accountants. Their cloud-based platform provides a structured, efficient, and transparent process for managing R&D tax relief claims preparation, helping firms deliver higher quality compliant and de-risk submissions. And their advice lines offer users real-time, expert-led support for all eligibility and scheme queries, acting as like this silent partner. Their advice line ensures users can navigate the schemes confidently while delivering value to your clients. The solution and services combined with Iris, which is a business critical accountancy platform which enables accountants to file all types of tax returns. You can see that each product complements the other, allowing to complete a holistic R&D claim from start to finish. I'm joined by Jen and Suze, both from WhisperClaims, who I will let them introduce themselves when I hand over to them. They are our expert presenters today, who will be sharing their valuable insights on how to navigate the complexities of R&D tax credits. Over the past few years, R&D has undergone significant changes, rate changes, merge schemes, complete overhauls. It can be really confusing place to navigate. Today, we'll dive into that in a little bit more detail. So during the webinar, Jen will dive into the world of R&D relief, how it's changing, what challenges firms are facing right this second, and importantly, how software like WhisperClaims can help accountants not just survive these changes, but actively thrive through them. And what's really exciting about today is that WhisperClaims now fills an important gap within the Iris portfolio. So that includes Iris Accountancy Suite and Iris Elements products. So for firms already using Iris for other tax and compliance services, there's now this ready-made solution for R&D tax too. Once Jen's given us her expert opinion on the landscape of tax, Suze will be giving us a working demo of WhisperClaims solution. Then she'll pass over to myself, where I'll be also demonstrating how that handover will work and how Iris handles the tax return side of things. And then finally, at the end, we'll open up for you to ask questions and engage in a Q&A session. There will be plenty of time set aside for the Q&A at the end of the session. But as we go through today, don't forget to just fire off your questions, which will appear in that Q&A box at the bottom. So let's get started, and I'm going to hand you over to Jen. Jen?
Thanks, Corbin. So yeah, I'll just be going through some detail of the merge scheme, which is now suddenly hitting everyone's top of their to-do list, learn about how to actually prepare merge scheme claims. Before I start on that, obviously, as Corbin alluded to, there's been a huge amount of change in R&D over the last few years, which the merge scheme is kind of the culmination of all of that change. But just to make sure we're kind of all on the same page with this, we went from having the SME scheme and RDEC scheme, which we've had in some form or other for basically the last 20 odd years, to having a single scheme which works for everybody. So it's been a massive change. We had rate changes that came in 2023. We had the R&D intensive scheme, which came in April 2023 for expenditure occurred after that date. And we also had, and I think this was the biggest and most interesting change for everyone, was the additional information form that was launched on 8th of August 2023. So there's been a huge change there. We're also seeing at the moment some impact of the claim notification form, which came in for claims starting in April 2023, but because of the way that it works, it's actually really starting to impact people now. We're seeing a lot of impact of that in the market. So I'll touch on all of those bits and pieces as we go, but just to make sure this is the kind of the context of what we're doing is all of that change that's kind of washing around, which means that essentially, depending on how you count it, there's somewhere between 5 and 9 different ways to prepare an R&D claim at the moment, depending on whether you're doing a pure SME claim, an R&D intensive claim, an SME and RDEC claim, an SME and this, so there's lots and lots of different things to think about and lots of lots of ways in which you could make mistakes, and ways in which this is not yet in any way a simplification of the R&D scheme. This is what we say, that all of these changes have been brought in by HMRC to increase compliance and also simplify the scheme, which I think will be true in about 4 years. I think everything will wash through and things will feel simpler then, but this is where we are for now. So, always happens, there we go. So yes, the merged R&D scheme. So this applies to claim periods starting on or after the 1st of April 2024. So obviously it's been in existence, it's been there, the legislation was finalised last year, but it's only really impacting companies now as they hit their March 25 year ends. So we're starting to see claims washing through. We've obviously there's a few claims coming through for shortened or lengthened accounting periods, that kind of thing. But at the moment, we're really starting to see this ramp up because of the March 25 year ends. So really, again, it's only just hitting, even though this legislation came into force last year. So the major difference with the merge scheme is as the name suggests, it merges the RDEC and SME scheme. So this is for all companies, regardless of size, regardless of anything to do with company structure. All companies can claim through the merge scheme. It gives an expenditure credit of 20%, so in the same way as the current RDEC. This is, so for large companies, the benefit of claiming remains the same, whereas for small companies, it's been reduced significantly over the last few years, and this is the last sort of big change in that. It uses the current SME PAYE NIC cap rules. So it doesn't use the RDEC cap rules, it uses the SME ones, which is a lot more generous. So again, large companies are actually going to be able to claim more than they would have before. And another major change is that subcontractor costs are now allowed for all claimants, including large companies. So again, one of the effects we're going to see of this merge scheme is taking benefit out of the hands of smaller companies and moving it into large companies, just with all of these kind of changes opening up opportunities really for claiming for larger companies. What it does do, though, is it does incorporate the ban on overseas R&D costs. So this means that if a subcontractor is working outside of the UK, those costs can only be claimed if, for some reason, those costs are exempt from these rules. But generally speaking, any work done overseas will no longer be allowable. And this also includes EPWs, so any externally provided workers that are, it doesn't matter where they're based, but it matters whether they're paid through UK PAYE. So if they're not paying UK PAYE, again, they can't be included in the claim. So we're going to again see some kind of shifting of costs, potentially shifting of where companies are doing their R&D, reduction in what the government wants through this is to move that R&D work to being done within the UK using UK subcontractors and UK EPWs. So they want to see more of the costs being based in the UK. Huge change in this is that grants and subsidies don't reduce the amount of tax benefit paid. So now it doesn't make any difference whether a company's had a grant or not. They claim in the same way. They don't need to exclude anything. There's no worrying about which scheme you claim through, anything like that. You can ignore grants and subsidies for the purposes of R&D tax relief, which does make claiming a lot simpler. Again, in 4 years' time, when everything's washed through, this is going to be a nice scheme to claim through. And so the current RDEC is taxed. It's an R&D expenditure credit. So you pay it and then you pay a marginal rate of tax. So HMRC have said that any loss-making companies claiming will pay the lower marginal rate of tax and expenditure credit. So that's why the overall tax benefit is now 15% for profitable companies and 16.2% for loss-making companies. So that's just about the different rates of corporation tax being paid. But it is, as I say, overall, it is a simplification, but the complexities of managing this alongside the other schemes that are still running and some other things I'll get onto in a minute means that it's not as simple as it potentially looks. But again, merge scheme, major changes are ban on overseas costs, the changes in subcontractor rules, and the grants and subsidies don't count anymore. Alongside the merge scheme, we are seeing the ERIS schemes, the Enhanced R&D Intensive Scheme. So to explain this one, I need to talk a little bit about the R&D Intensive SME scheme. So this was brought in for expenditure incurred after the 1st of April 2023. Trying to be polite, but it was brought in a hurry as a response to the business's response to the cut in rates to R&D tax relief. There was a major outcry when SME rates were cut. And this was a way of cushioning that blow for smaller, really R&D intensive companies. So what this means is that SMEs who are loss-making post the R&D being applied and whose R&D spend is at least 40% of their total expenditure for the claim period can get the higher rate of tax credit. So it was reduced to 10% for expenditure incurred after 1st April 2023. These companies can continue to claim at the 14.5% rate. So the R&D intensive scheme is actually only applicable for quite a short period, because then the ERIS scheme comes in for claim periods starting on after the 1st of April 2024. And this runs alongside the merge scheme, and companies can choose, assuming they meet the criteria for ERIS, can choose which scheme to claim through. So under ERIS, the expenditure limit is reduced to 30%. So a company has to, their R&D spend has to represent at least 30% of their overall spend for the period. All the other merge scheme rules apply. So all the things I just said about overseas expenditure, subcontractors, all that kind of thing applies. Major difference between this and the R&D intensive scheme is that the company must be loss-making before any enhanced R&D expenditure is applied. So that does cut down on the number of companies that would actually qualify for this. And there are special rules, which I will get onto the next slide, for companies with a registered address in Northern Ireland. So what this can do is mean that companies that are doing a lot of R&D can make bigger claims. They can get a better benefit. However, the big warning I give all companies is that depending on the relative size of the loss and the expenditure on R&D, sometimes it's actually more beneficial to claim through the RDEC, new RDEC, than it is to claim through ERIS. So the company's got to be really, really careful about looking at what the benefit is through both those schemes for their expenditure before they go any further with actually making their claim. So that's the ERIS scheme, which again, we're starting to see some uptake of. There are, as I say, special rules for Northern Irish companies because Brexit. So this is to do with the Northern Ireland Protocol and the way that all kind of benefits and things are worked out in Northern Ireland. Now, this is actually relatively new. The legislation for this was only finalised and the guidance only published at the end of March, so March 25. So even though this has been in play for any claims for companies registered in Northern Ireland since for the same period, because it was a later edition, we're only just kind of really understanding the implications of this now. But this applies to any company with a registered address in Northern Ireland. So that's really important. It's not that they have a trading address there, that they're carrying out any operations, anything like that. They have to have a registered address in Northern Ireland. And they have a trade in goods or a trade involving activities of electricity, or that they, I've realised I've got a typo in the slide, they have no trade in goods and they haven't opted out. So if they don't have a trade in goods, they can opt out of Northern Irish ERIS, but otherwise they're in it. Now, the absolute key thing here is everything about this is the same as other ERIS, except that overseas restrictions do not apply to these claims. Basically to do with, again, the way that Northern Ireland interacts with the Republic of Ireland, all that kind of thing. But what this means is, so they take away the overseas restrictions, so companies can do their work anywhere, they can use subcontractors based anywhere, they can use EPWs that aren't paid through PAYE. However, the benefit is capped according to de minimis rules. So this means, so total de minimis aid cannot exceed €300,000 over a 3-year period. So what you've got to look at here, and this is where this gets very complex, you have to work out any de minimis aid received by the company and then look at the additional benefit received through Northern Irish ERIS versus what they would have claimed under RDEC. So again, if there's massive overseas subcontractor costs, that difference might be big. If it's a fairly standard claim with very little overseas expenditure, the difference will be minimal and therefore you're unlikely to hit the cap. But you've got to be looking at all of these things. If anything goes over the cap, they can claim through RDEC, and they can choose to make the claim through RDEC anyway, instead of under Northern Irish ERIS, which does remove the cap, but brings in the overseas restrictions. It does require a huge amount of information to be gathered about any de minimis aid received, previous claims made through Northern Irish ERIS or R&D intensive scheme. So I'm expecting to see companies who've don't do much in the way of overseas, don't subcontract much overseas, don't use overseas EPWs, to potentially choose to claim through RDEC because it's just so much less complicated than claiming through Northern Irish ERIS. But we'll see that as it washes through, as people start using it. The other thing there's been a huge change with is the additional information form. So that's gone through several iterations since it was first launched in August 2003. But obviously, because the structure of the merged and ERIS schemes is very, very different, it's had to have a complete revamp. So the main things that we've been kind of highlighting to people is there's a lot more detail required now about subcontractors and PWs involved in claims. So HMRC are looking for a registered company of subcontractors or the PAYE references for EPWs. They're looking for company registration number. So where those subcontractors are UK companies, they want a registration number. Again, so they can look at double dipping, which they've never actually been able to do very effectively before. You need to know where the work was carried out, was it in the UK or overseas, and you need to know the reasons for the exemption, and you need to put those into the form. The one slightly odd thing about the way this is, the way the additional information form is put together, is that the ERIS and the merged scheme RDEC are treated as two completely separate schemes. So that means that if you were making a mixed claim, if you wanted to claim half your expenditure through RDEC and half through ERIS, you'd need to split the project costs, and you'd need to know what staff cost your claims through ERIS and what staff cost your claims through RDEC. I say it's odd because obviously there's no difference. The way that you would get to your eligible expenditure through ERIS and merged scheme RDEC are exactly the same. So it's only an accounting treatment as to which way you then decide to realise that benefit. But this is the way HMRC have decided to do it. So when you're preparing all of the information for the AIF, you need to be aware that you may have to split your costs between the two schemes, and you definitely need to know which scheme or schemes you're claiming through before you start doing that work. And then obviously you need to give details about Northern Irish companies, so their registered address and their company number, which isn't asked for UK companies. So big changes, a lot more information required, but fairly manageable if you're doing all the work you need to do to prepare a merged scheme claim anyway. One last thing before I hand over to Suze for the demo is just what we are seeing a lot of at the moment is confusion between the claim notification form and the additional information form. And this is causing issues. It's causing some people not to submit claims because of this confusion. So I just wanted to emphasize this, is that the additional information form is required for all claims submitted after the 8th of August 2023. So all claims, regardless, you have to do an AIF and you have to submit it before the CT 600. And that's a really detailed, it's a really extensive form. It asks lots of stuff about the claim. It's not a quick thing. Our users tend to find it takes 20 minutes to half an hour, but we have a lovely little output that we do that has everything in the right order, in the right format that you need to fill out the form. If you don't have that, it would take significantly longer. The deadline of this is linked to the claim submission deadline. So you can submit an AIF for a claim right up to that last 2 years after the end of the claim period date without any issues. The claim notification form, on the other hand, is for companies that have to notify HMRC that they're planning to claim R&D tax relief. And this is submitted within the claim notification window, which is the first day of the claim period and starts, on the first day of the claim period and runs to 6 months after the end of the claim period. So again, what we're seeing is things like people going on intending to do an additional information form, finding themselves in the claim notification form and being told, oh, it's after 6 months, you can't submit. So hence my emphasizing the need for understanding both of them. And the claim notification form is only required for claims starting on or after the 1st of April 2023, where the company's not claimed before, they've not submitted a claim in 3 years prior to the end of the claim notification period, or some claims were submitted, but they don't count because they were submitted as amendments for certain dates. The key thing with this, or the problem with this that we're seeing really, is that the pages, they're both on HMRC pages and they're laid out in identical ways. So we can see where the confusion is coming from, hence us wanting to really emphasize that you've got the claim notification form and additional information form, both of which may be required. The claim notification form at the moment is impacting things massively, because if you miss doing that claim notification and needed it, HMRC will not accept the claim. There is nothing you can do about that. And obviously the deadline for that is a lot earlier than the deadline for submitting the claim itself. So we are seeing people losing out and not being able to submit claims because they've just missed that window. So to kind of summarize what I was saying, huge amounts of complexity, lots going on, lots to remember, lots of change. So I'm going to pass over to Suze, who's going to show you how WhisperClaims can help with that.
Brilliant, thank you, Jen. And I remember to unmute myself before I start talking, which is always a good thing to be able to do. Right, let me just share my screen with you all. Can I just check that you can see that, guys? Is that okay? Brilliant, thank you. Okay, so I normally have a significantly longer amount of time to run through these demos, so this is going to be a really quick spin through. just after all of that legislative change that Jen's outlined, having a way to structure, de-risk and deliver R&D tax claims with confidence and efficiency is really handy. And I'm going to show you how WhisperClaims makes that possible without losing the human touch that you and your clients value within your advisory services. So let me show you how this is going to work. So if I just dive into a claim here. So embedded in the core of WhisperClaims is a powerful compliance engine that dynamically assesses every claim based on the claim year entered, ensuring that the right questions are asked to identify eligibility and eligible spends, and that users are routed down the correct scheme path, that grant impact checks are carried out for claims paths that are relevant, that have grants in them, and that project write-up requirements are fully covered off. But as with any technology, the principle of rubbish in and rubbish out still applies, and the quality and accuracy of the information entered is obviously going to be fundamental. And that's why our software is designed not to just process data, but to guide and support our users through the entire journey, making sure that they know what good looks like at every stage and ensuring that claims that do not meet HMRC's criteria are going to be screened out. So first up, this is us in a claim. This is the start of a claim. So you're guided through a dynamic, structured set of questions designed to mirror HMRC's compliance criteria. You have a qualifications check section, a company section, a project section, a cost section, and then your project write-ups. Throughout the whole process, you have access to us here in the background. So you can access us and support just by clicking on this icon. So you can phone or email us, or you can engage with us via live chat in the live chat window that I've just popped up at the bottom there. Within the app, for every single question, we've got in-app help and support. So you've got notes, videos, and links that take you directly to the guidance on HMRC's website as well. You have the option to store notes on every question. It looks like this. And you also have the ability to flag questions if you maybe want to go back and review something as you're working through a claim. Maybe you've got placeholder figures, that sort of thing. The qualification check section ensures that your clients' claims meet the very minimum criteria to move forward. So we're checking things like the claim dates, that the company is a limited company, that pre-notification requirements have been checked, and we embed risk assessment throughout. So you have clear visibility of any issues early on in the process rather than at the end when all the hard work's been done. The dynamic feedback appears at the bottom of every screen and is going to alert you if there's a hard stop. The pre-notification question is just a really good example of being able to show you that quite easily and in real time. So in this example here, I'm being asked if I've submitted a claim within the last 3 years. And if I have, that's absolutely fine. I can move forward. If I haven't, and then I also haven't then obviously pre-notified, you're going to see that we've got a hard stop that we've reached. We've got several endpoints like this built into the system to end a session if a claim is deemed to not be viable, as with this example here. And then it's important to note that you don't pay for claims that have been screened out of the process, and you have a clear and transparent way to help you and your clients to understand why you've not met the criteria on this occasion, which is obviously really helpful for conversations moving forward. Into the company section, you have the ability, so once the qualification checks are finished, you have the ability to invite collaborators into the app, so you can engage directly with your clients within the software. Collaborators do have a restricted view of the app in its entirety and some of the questions, and you can manage that within the settings. I'll just jump to the project section just now. Project section is where you walk through a process of gathering information about the work that your client's been undertaking over the period, promoting conversations through the questions that we're asking and making sure that you're gathering all the right information, steering you along the right path. I'm just going to pick out a few of these sections here for us for today. So importantly, we ask about competent professionals, their extensive skills and experience, and how long they've been working in their field. And we give you the ability to capture all of this in the table that you can see in the screen here. We also point you on this question to HMRC's GFC3 guidance. So you have the ability to easily and quickly familiarise yourself with HMRC's definition of what a competent professional looks like, again, keeping you right. Moving down, let me just pick out some other things of relevance just to talk about, like related to the merge scheme, I suppose. For merge scheme claims, we ask about work, where the work was carried out. So this question here, oh, sorry, flip through a bit category there, where work was carried out, and if work was carried out overseas in part or in full. And we're going to interrogate that later on in the process and ask you some more questions about that. Another important thing as part of your process is we're always making sure that we're reminding you to make sure that you're asking your client about what evidence they have to substantiate the work that's being carried out, and that they're keeping good archives. So should the worst happen and HMRC want to ask any questions about a claim post-submission, everything is available and ready at the tip of your fingers. Moving into the cost section now. This is a much more straightforward part of the app for most of our accountants. They like this bit much better than the previous section. The cost section here is again really clearly laid out in easily understandable sections. I'm just giving you an example here of the staff costs. So you've got a table here displaying all of the staff and the relevant details. We have functionality that enables you to easily upload your client's data to save you time on manual inputting, and our dynamic compliance engine will be flexing in the background depending on the claim start dates, only allowing you to include costs that are eligible in the accounting period that you are working in. So for example, for claims that start on or after the 1st of April 2023, cloud computing and data licensing are eligible cost categories. If you were working on a claim that was pre that date, these two fields would not be visible. Again, just keeping you right, demonstrating how we're keeping you right and on the right track amidst all of this change that we've seen. One thing that's maybe worth mentioning, again, I won't go through all of the costs, is this final question here. We make sure that we ask you at the end of the cost section for merged scheme claims if you qualified under the R&D intensity conditions in a previous year, that just reminding you that you have the option or opportunity to take advantage of a grace period if you so wish. Again, just reminding you of some of these technical details that are easy to forget with everything that's going on and all the different changes to the rules and regulations. The final part of your journey is to identify which projects you're going to write up to satisfy HMRC's additional information form that Jen's talked about. During the process, we will have asked you how many projects are being claimed for, and then during the cost section, the app is going to help you to identify what proportion of spend each project represents. Once the costs are in, we present you with this table, allowing you to easily assess expenditure and how it's been distributed across the projects. And this part of the process comes at the end because we want to help you to minimise the amount of time and effort you and your clients need to spend writing up full detailed project descriptions. Of course, if you choose to, you can provide full project write-ups for all of the projects, and some advisors will prefer to do that, and that's absolutely fine. But if you identify at this point that maybe one or more of the projects only represents a tiny proportion of the overall spend, you could choose not to write up those projects in full, and again, that will save you time and keep you efficient throughout the process. The project templates are the last bits of the inputting within the app, and they look like this. So again, all of the relevant details, making sure that you're adhering to HMRC's additional information form and including all the information that it will be looking for here. The final part of the process is your review. We present you with a review screen that on the left-hand side provides all of the numerical outputs. So it gives you a chance to stop and take a breath and make sure that everything makes sense before you move to downloading your reports and your additional information form outputs. I'm just gently scrolling down here so you can get a quick view of all of the data that you can review. And of course, you can go back into the question set at any point and make changes and edits based on anything that may need to be reviewed. Over on the right-hand side, we have an automated in-app risk assessment, and I've purposely made this look horrible because it's easy to explain the more data that it includes. This in-app risk assessment is based on a low, medium or high risk score, and the app has been evaluating in the background a variety of potential risk factors that may pique HMRC's interest. This risk assessment is not a measure of eligibility. It's here to help you ensure that all of your I's are dotted and your T's are crossed, and you have the opportunity to go back and double check any of these highlighted elements of the claim before moving forward. Further down the screen, we display how much the report fee is going to be before you download and pay, and we give you an estimated eligible spend and tax benefits, allowing you to make some decisions like how the benefit might be realised, how you want to fee for this work, if it's perhaps a much bigger claim or even a much smaller claim than you're expecting, and so on. The point being that you still have the ability to make choices at this point. And once you're ready to move forward, you get to experience the wow moment. So when we go to finalise the claim, the app is now going to take over and turn all of your clients' data into a structured, clearly laid out report, demonstrating to HMRC that all of the right questions have been asked and that care and consideration has been taken throughout the process to adhere to HMRC's guidelines. Before you download, you do have the opportunity to engage with one of our optional paid for services, which is a deep dive desk-based review of your client's claim performed by our in-house team of R&D tax experts. So if you want to include that, you can just add that to your basket before moving forward. When we click download, that is when we'll be presented with our documentation, which sits here. And this is our R&D report here that we attach to the CT600 submission. And without any additional work on your part, as Jen's already mentioned, we provide you with a text file with all the data that you need to complete HMRC's additional information form, which, as Jen said, is an extensive form, once again helping to keep you and your processes efficient and also giving you reassurance that you have everything you need for a smooth submission. Of course, if you download the report and you maybe see a spelling mistake or you want to make any edits or amendments, you can unlock a claim. The app will then regenerate a new version of the report and AIF outputs based on any edits that you make. So there's no need to worry about version control or submitting the wrong document. And as I've briefly touched on, our subscription includes unlimited access to our advice line, meaning you have an R&D tax expert available whenever you need support or guidance or a second opinion at the end of the phone, email or live chat. So I think the final message is that we're not just software. We are, as Corbin said, your silent partner, helping you to deliver the best possible outcomes for your clients with their R&D tax. Now, that is just a snapshot of what WhisperClaims can do. If you'd like some more information and a more detailed demo and a look at the report and the AIF output, I'll be sharing my contact details in the chat box in just a moment with links to my email, a booking link, and also I will send you a link to the pricing information as well. And please do get in touch because I'd love to chat. That's it from me. I'll just hand over to Corbin now. Corbin, I will stop sharing.
Wonderful. Thank you, Suze. So what I'm going to do now is I'm going to take over control of the screen, and Suze, Jen, can you just give me a nod if you can see? Can you shout? No, you can't see anything, can you? I did think I pressed it, this one. I'm going to press share, not close. Can you just give me a nod? Yeah, fantastic. So I'm going to give you a demonstration of the RDEC Accounting Suite and how that process can be handed over from WhisperClaims into the tax return, the CT600. Naturally, this can be done both in our RDEC Accounting Suite or in our Iris Elements products, which handle both these areas. Both are obviously very powerful tools designed to simplify and streamline that process of generating the CT600 with those associated R&D claims. So what it means is, obviously, if you can combine WhisperClaims, which is producing all that complex documentation, feeding the expenditure into the R&D hub of Iris, it will produce that tax payable where you can then attach your supporting documentation and file to HMRC, making that a lot more streamlined. So what we can see here is I'm in, sorry, I'm getting a bit confused there. What we can see here is we do have the RDEC Accounting Suite with all our entries down the left-hand side, which somewhat mimics that of the CT600. We can dive straight into the research and development area, which is associated to that CT600L, which was relatively recently brought out. And the software will automatically display to you the claims that are applicable to the associated accounting period for that limited company. As you can see here, it completely relates to what Jen had been talking to us about, is that ERIS and the merge scheme for RDEC, which is a lot more like that above the line claim that we've seen for RDEC, where we move obviously the previous SME into that area. The first screen that we're actually now seeing is that additional information. If there was ever a decision to split a claim between ERIS and the merge scheme, it will obviously take that uplifted company PAYE and NIC cap, but what it will do is it also splits it between the two claims. So the first thing that we can do is we can actually enter any PAYE and NIC entered, and it will identify what that cap is, automatically uplifting it, and then it will look across the two claims to cap it against the two, if that was the case. Where we can do then is we can dive straight into the merged claim, where what we try and do is we automate as many of the calculations as possible to make that as simple as possible for you. We highlight any entries that may require any user interaction. And what we can do is we can then simply enter the expenditure, where the software will then automatically calculate all through the 7 steps that I've identified in HMRC's documentation. It will automatically calculate any notional tax that is applicable, applying that rate of CT, pulling that out. It will also then offset any of your CT liability, if there is any, firstly against your notional tax, then moving into the payable if the liability is as high as such. And as we can then see, we do have that PAYE restriction. So it will apply any restrictions if there are any. In this situation, we can see that it has capped it out, and then it will continue to have an audit of that. As we have exceeded that limit, the 10,000 that is in excess will carry into our next accounting period for it to be pulled into the calculation at the top here as well. If there are any other surrenders to groups, any offsets from other liabilities, they can be then entered in those following steps, where it will then continue to restrict the payable tax credit here. Under the additional information, we can see that we do have the options to state that the company is exempt from this restriction. If that was to be selected, you can see that the claim will go uncapped. Any connected companies where we have that PAYE from those groups can be also entered within here. Once all information has been entered within the claim, the software will automatically populate the corresponding computations and tax returns. So we can then run the tax computation, and we'd be able to see that associated schedule that has been populated onto the CT computation, which will then obviously be sent along with the tax return. So we can scroll down, we can see RDEC and merge scheme. We'd also be able to see that CT would automatically be produced with all of the associated fields completed. As we know, with the introduction of the CT600L, a significant number of fields was brought along with that, making it significantly more complicated. But the IRIS software will then, as you can see here, complete through those 7 steps, automatically completing all of the returned fields. When it comes to the generation, it's at this point you would then be able to pull any of the supporting documentation from WhisperClaims and attach it to this associated claim, making sure that you have a very thorough and detailed claim for HMRC when submitting it. So what we can see here is that obviously we have a very good solution between the two. It's going to take away a lot of the complexities, and we can see that the two solutions will work hand in hand, allowing you to actually offer a service, bringing that more in-house. So hopefully we can see that that is bringing a lot of benefit there. That shows us the two solutions. Suze, I think, are we going to go back to sharing the deck?
Thanks, Jen. Thanks, Corbin. Yes, it was just a quick mention before we head into questions, and you guys are brilliant. There's tons of questions coming in. Hopefully I've answered some of them in the chat. Hopefully that's covered you off. Jen, if you could just pop to the next, I think it's the slide before. Yes, just to let you know that we do offer a 30-day subscription-free trial, and within your trial you get 1 free report download, 1 free claim review, and as we've already talked about, unlimited advice line support within that period. So we give you the opportunity to run through a full claim. You can download that claim. It could be a live claim, it could be a test claim, it's entirely up to you, but you get 30 days no obligation to subscribe to really get a good feel and a 360-degree view of what WhisperClaims can offer you and your service. So just thought we'd throw that in there before we move to questions.
Lovely. Okay, so I think there are actually a couple of important topics as well that I think would be good to get your feedback on, Jen, here. So alongside the merge scheme, we have had things like the IAF process and pre-notification rules thrown into the mix. How have these how have these changes impacted the confidence of the profession? Are firms pulling back or and adapting?
So we'll see. I'm talking, aren't I? I'm not muted. So I would say that we are seeing a lot of firms pulling back just because all that complexity, everything that's going on, we're seeing a lot of that. We're really seeing confidence impacted. So we did a confidence survey at the end of last year, and that showed that especially accountants who were doing a few claims a year had actually got much lower confidence than, for example, R&D advisors who are doing loads and loads of claims in a year. And we're going to be kind of keeping that going to see how that changes as this all beds in. But we would say, so anecdotally and through that data, there's definitely been a massive hit to just how confident people feel doing this. I mean, it's a huge amount to remember. It's a huge amount to manage. We can see in the questions, I've been kind of watching them come in. There's already a lot of worry about, oh, okay, how does this happen? We've got people who are saying they've missed claim notification deadlines. It's a huge amount to do. Deadlines are changing, all that kind of thing. So it's I don't want to say scary, but it is a scary place to be. And I think on the other side, we have seen through HMRC's compliance activity, several of the kind of, we're going to say, bad actors within this space being taken out, being shut down through various means. So there is an opportunity there. There are people who need advice, that need help. We have seen that there's been a lot of bad behaviour in this area of bad advisors. And we always feel that, especially accountants, do have that duty of care to their clients. And we feel we feel very strongly they should be offering this as a service. And so what we're trying to do through both our software and our advice is kind of help build that confidence up with them again, help them with webinars like this. It's all about trying to get the word out. Things like the claim notification, especially, is something I feel that HMRC has not publicised anything like enough. And that's now impacting a lot of companies who aren't getting their claims through. So we want to put as much kind of support, help, everything out there into the marketplace as we can to kind of get people through this really difficult time and to stop them pulling away, because in the end, it's a valid area of tax. It's a valid tax relief for companies doing R&D, and it's something that should be part of every accountant's toolkit, is being able to do this.
Fantastic. So for anyone in the audience today thinking, this sounds good, but we've always outsourced this or left it to someone else, what would you say to them?
I mean, the big thing we say is, are you sure that other person they're going to is a legitimate? And I'm not going to say that every company that you outsource to is bad. There are some very, very good R&D consultancies out there that will do really good work for your client. However, what we hear from people coming to us who have outsourced is that there's a lack of control, there's a lack of visibility, and obviously a lot on the client side, it's a more expensive way to go down. It's usually a more expensive route to go down. So there's a lot of downsides to it. If you absolutely don't feel confident and you are sure that the company you're referring your clients to is legitimate and compliant and ethical, absolutely, if that's the best way for you, we would encourage you to do that. If you're not sure of any of those things, I think bringing it in-house is absolutely something you should do. Obviously, using something like WhisperClaims, using our software, means you've got that support, you've got that backup, you've got that process. And I think what we've demonstrated today is all of these changes are really just pushing the need for you to have a really repeatable, steady process that you go through every single time to make sure that you are claiming through the right scheme, you're claiming the right cost, you're claiming in the right way, you're remembering grants or you're not remembering them, depending on what kind of claim you're doing. So there's a lot to think about, but in general, I think from what we've seen in the last few years, you need to be confident that your clients are getting the best advice, whether that's from you or a third party. That should be your main concern, is that your clients are getting good advice and being led and helped to make compliant and ethical claims.
I think I should have opened that question up to the audience because I've seen a comment in the chat saying, do it yourself, and the software is very efficient. So it's a really nice comment there. I think we are running up to time. So do we want to ask a couple of questions from the Q&A? Suze, have you
Yep.
spotted any that are actually particularly you'd like us to address, or Jen to address, shall I say?
So we have got some very technical questions in the Q&A that is probably not the right forum to be discussing those just now. So
If nothing else, juggling claim dates and notification periods on the fly is not my strong suit.
We want to make sure nobody's like compromised in their how they're answering questions on the fly. So I'll just pick out a couple if that's okay. So there's been a lot of chats about pre-notification and missing deadlines and things like that. And I suppose maybe just one to reiterate, Jen, is I've answered everybody who's asked questions, but it's just worth it saying out to the audience because some of them were in the chat, is if you miss the claim notification window at the minute, that's it, isn't it? The claim's lost. There is, as far as we know, no mechanism that you can go through to plead, to HMRC that mistake or something.
Yeah, we're seeing them reacting really, really quickly. Like within a week or so of a claim being submitted, we've had people getting letters saying the claim's been removed because they haven't claim notified. So there's not much in the way of sympathy coming from HMRC if you've missed it. I will say, and I haven't had time to fully absorb this, there is a small window of claims where if you miss the claim notification, you could potentially write to HMRC and be given sympathy because they gave bad advice. Both their guidance was wrong and some guidance they gave at an R&D forum was wrong. So there's a very, very short window they're allowing where that advice might have impacted someone's decision to make a claim. But none of the claims that have come through, the people that have sort of asked questions, none of those have been in that kind of date. It's a really, really short window. And we'll be publishing that on our website once I've had time to kind of absorb it and work out exactly what it means. So yeah, at the moment we can't say that. I know someone asked if there's a technical glitch and you couldn't pre-notify by the date. I mean, it's always worth, at the time that you're having the technical problem, emailing HMRC and telling them you're having a technical problem with their systems. I think going back several weeks later and saying, oh, I couldn't do it because of technical glitch, they're not going to receive that well. But yeah, I mean, everything about the claim notification, as far as we can see, is they're being very absolute about you miss this, you can't claim. One thing you do need to remember though is it's always, if you're working with a company that has been claiming in the past, make sure you're going back far enough through that claim notification window, because I had someone the other day whose 2020 claim was submitted so late that it fell within the claim notification window. So they didn't need to do one for their 2025 claim. So putting the time into looking at every previous claim that's been submitted and looking whether any window is worth it. But yeah, for first-time claimants, you're really stuck. There's nothing you can do at all.
We've just related to the claim notification. Kitty's asked if we need to submit a claim. She needs to submit a claim notification form through the software, or is it filled out and then you go through the HMRC gateway? So no, you submit that on HMRC's website, and we'll pop a link up to that in the follow-up. And if I've got time, I'll put it in the chat as well. So that's all done separately through HMRC gateway.
So our problem with the claim notification, and it's something we bounce around internally, is we don't currently have a software solution for it. The problem with claim notification is we don't know what we don't know, if that makes sense. So if a claim hasn't been added to our system until after the claim notification window is closed, we didn't know that claim is coming. We didn't know it would need notification, but we are looking at whether we can produce a solution for that. To be fair, though, the claim notification form is really simple. It's a few questions about the company itself, UTR, company name, all that kind of thing. And then it's one box that says, just give us an idea of the R&D that took place. The key thing to remember as well with the claim notification form is you can do it from the first day of an accounting period. So from the very first day that, as after the other one has ended, you can notify then. So again, as you can see with that, HMRC are asking to know about the R&D before it's even taken place. So they can't ask for detail. They can't ask for exactly what happened, because that would be before anything had been done. So it is really simple. I would say you don't really need any kind of software system to be able to complete that. You just need to remember to do it. I will say that a lot of larger consultancies are just blanket notifying for all of their clients, or larger accountancies are just blanket notifying for any client that may at any point need to do R&D. It's now a standard thing they do the minute it clicks over into the new financial year. They're just doing a claim notification just in case.
Yeah, and we've had some other questions. So pre-notification is huge in the questions that are running out of time. So just do this last one because it's probably worth, if one person's asked it, then other people may be thinking it. Somebody's asked, sorry, it's anonymous here. When does the claim period start? Is it the date when R&D expenditure is incurred, or when the R&D claim is submitted? Jen, I'll pass that over to you. Very straightforward.
Yeah, so I realised that I tend to use claim period and accounting period interchangeably. The claim period would line up with now. This is where I have to be very careful. The claim period essentially lines up with the period of account. So the company's financial year, the company's financial period of account for most things. So for pre-notification, it lines up with that. Obviously, accounting period is slightly different. So if it's a longer period of account, you've got multiple accounting periods, those would be treated by the AIF as separate claim periods. But essentially, it lines up with the financial period dates, the accounting period dates, that kind of thing. So there's nothing special or different about an R&D claim. It lines up completely with any other kind of financial dates you're looking at for the company.
Well, I think we're right on the way. We've run over already.
Yeah.
So thank you everyone who stayed. We've had so many questions. We will do our best to get back to everyone who has asked a question. Obviously, if you posted anonymously, I'm really sorry we won't be able to identify who you are, but feel free to get in touch with us directly and forward us the question following the seminar today. Corbin, I'll hand back to you for closing.
Wonderful, thank you. So to round off the session and to leave you with some key takeaways, the current R&D market is in constant flux. The environment remains notably complex with ongoing changes in regulations and rates. While we don't expect these complexities to change for a few years, with the right tools and support in place, you can navigate these complexities and maximize your clients' R&D tax refunds. Thank you for joining us today. An email will be sent out to you all with the recording of the webinar. We hope the information presented by Jen and Suze and myself has been insightful and helpful. We invite you to reach out to us with any additional questions or learn anything more about WhisperClaims and Iris, so we can help you, support you in these unique R&D needs. I hope you all enjoy the rest of your day, and we look forward to connecting with you soon. Thank you.
Thank you. Bye.